All right, good morning. Let's get right into the stock market technical analysis. If you're new to the channel, we cover stock trade ideas. We look at the charts. Ultimately, at the end of the day, we're looking for ways to make money in the market. So welcome. And as I go along, always drop me a thumbs up, guys. If you find value, it helps the channel. The channel's growing, whatever. But the point is that you guys are finding value in the content and you're able to really follow along with the trade ideas. I make money on these trade ideas. I lose money sometimes on the trade ideas. Nothing's guaranteed here. But again, I'll cover everything in the charts that I'm seeing and the reason why I like it. Everything's technically based. All right, and if you guys are interested, take my stock market technical analysis course. It's $100. I priced it so that everybody can afford it without giving it away for free. All right, my time's not free, so I didn't want to give that away for free. It's about 4 to 5 hours of video training going through multiple concepts that will really help you have a complete trading game, at least with this strategy. Okay, charts, triple Qs. We've got some selling today. Again, no real big change from yesterday, but ultimately just seeing selling, getting rejected at the 200-day simple moving average. Again, yesterday they traded it right up into that simple moving average, that 200-day. Today, flat rejection. All right, doesn't mean that this is going to chop around for a little bit longer and maybe we'll recover that 200. I think we're going to fail here. I'm looking for this most recent rally that started back in mid-March to be a bear market rally, and I'm looking for the next leg lower in triple Qs. All right, so I don't see big support until about 300, 297.50 on triple Qs. That's the area where I think we're heading, and probably actually quite a bit lower, to be honest. But for now, we'll just take it day by day, and we're looking for this rally to fail. Looking at the hourly chart here on triple Qs, again, this is the most recent rally that we've seen over the last couple weeks. And as we were rallying up, we started to put in negative divergence. And so I just want to continue to reiterate that. All right, we have momentum moving lower while price continued to drift higher. Now, a lot of people, all they do is look at price. Retail, for the most part, they look at price. They look at line charts. If price goes up, they're happy. And they think price will continue to go up. And if price goes down, they're sad or fearful and they panic sell. But that's not how we want to trade. We want to look for leading indicators of where price is heading in the near future. And that's what these momentum indicators help us determine. So the probability as we were rallying here was that we were going to start to reverse trend. We waited for a break of the trend, and that's basically your hourly sell signal. So you break, back test into the 200, and now you can see the selling's actually starting to get a little bit more impulsive today. All right, we're kind of having bigger bread candles. Doesn't mean that we're going to continue lower, but I think we will. All right, so probability to me tells me we're going lower, and that's how we're trading it. Looking at the IWM on the daily chart with the small caps here. Again, IWM just, this one's very clean and clear. Big resistance at 209, all right? Big sideways trading range for over a year. So anybody that was long IWM thinking we're going to just break out, I know a lot of people were looking for this to be a potential bull flag. So they were looking at like this humongous flagpole and then a big sideways pattern, kind of a flag. And then they were looking for just off to the moon. But that's not what's going on, at least from my perspective. So we basically, this one just screams bearishness to me. For one, you had this big sideways trading range on the daily and you broke out to the upside. So at first glance, just if you're watching price, that's bullish. You got to break out to the upside. But that breakout, when it happened, occurred with negative divergence. So you can see that basically, if I can get my line drawn out, you can see right there. All right, we had a new higher high in price, and yet momentum was less momentum. Okay, again, take my course if you guys are unfamiliar with how to read the divergences and it's just a little hazy. I go into detail on how, I really spend a lot of time focusing on that. So take the course, link in the description below. There's a breakout with negative divergence, which means it has a high probability of failing. We did fail. We head to the bottom of the range, bounce into the 200 and fail. All right, so now we're below the range, which means all the longs that have been long for over a year are underwater. Now, what bear market rallies often do is give you a slope of hope. They give you, they keep longs in the trade because They make everyone feel like the selling's done, and it's the slope of hope. All right, you fall, you rally a little bit, keeping your longs in, and then you fall more, and then eventually everyone starts to capitulate and they panic sell, and that's usually the end of the move. But we'll look for that. We don't see that yet. All right, so now again rallying right into this resistance level 209. Brief little breakout last couple days and then failed instantly. All right, so we're still holding resistance right there and selling down today. So looking for more lower prices on this one as well. My target on this one, at least for the next swing trade, is down to this 173 down to 170 area. All right, that's where I think this is headed. Okay, a couple trade ideas. I pointed these out. TSM, more downside today. And again, ultimately, all I see in this, the bigger picture, is a big sideways trading range where you had support sitting there at 108. All right, lots of reactions. We broke support, and support now becomes resistance. So you break, you back test, it's resistance, and now we roll over. So I'm looking for more downside, looking for this to continue to trend lower. I don't see any indication that that's not the case. So I like it continuing to the downside. Tesla, I like it short right here. I liked it. I've been shorting this thing right in this area. All right, so it's usually it's a kind of a process. You usually don't hit a key level and then just reject and sell right down. Usually it's kind of this toppy pattern where you kind of pop above and run stops and everything. And that's what we're seeing. So it doesn't mean that this is finished, but I think it probably is. The thing I like about Tesla shorting here is, one, we rallied into key resistance. All right, this uptrend line right here is key resistance. As I roll out on the daily chart, you can see all these tags of support right there. I've got them kind of circled. But that was your, and there's another one right there. So that's your trend line I've been watching. We rallied into that. That's key resistance. Again, they popped it yesterday, making it look believable. Today, breakdown back below. So again, it's just showing that this resistance, especially with yesterday's price action, popping above, running stops, sucking in some more longs, and then today rejecting and selling down. I like that price action. Also, if you look at the hourly, and one reason why this the price action yesterday was not believable, because look, they're breaking it to new highs in price on this hourly chart, and yet momentum clearly dropping off. So that high right there was a higher high in price than before, but momentum is going lower. All right, and that's on the RSI and the PPO. So in general, that's what you want to see for a false breakout. And then when you see the rejection like we're seeing today, to me that's a sell signal, or at least an objective area to short at. All right, you're shorting right at major resistance after breaking above and failing back below with negative divergence. All right, so I'm looking for lower prices in Tesla. Tesla could go a lot lower. All right, if we are going to get that bear market and that next leg lower in the general markets, Tesla should be down here at about 552 for the next level of support. All right, so I'm shorting Tesla, and from where we're at now, that's a 50% drop. All right, new trade idea here, UPS. I noticed that these some of these transports are kind of weak, and I noticed it yesterday with UNP, which is a railroad, but UPS, this one I like. It's got a sell signal today. So here's the thing that I like about it. One, you've got negative divergence. All right, see this on the daily chart, see the momentum, how it's just dropping off, and yet price continued to make a high. That's a divergent high right there. So you had price moving up while momentum was moving lower. All right, that's negative divergence. And then in general, we've got the support line down here. You can see 1, 2, 3 reactions. We actually had a reaction here. I like this as well. See this reaction yesterday, closing, bounced off support, closed above the 200-day moving average. This is where the buyers would want to step in. They want to buy at the 200-day, all right? But the negative divergence tells me that it was likely going to break soon. And today, rather than the buyer stepping in, buying at support, they gap this thing down, and it's selling down, breaking this trend line support. So that's a sell signal on UPS. I see support. You've got some support right here. I probably should mark it out. A little bit of support right about there. Okay, and that is at 194, we'll call it. You break that, you should head right down to 177.50. All right, I don't see anything until that. So 177.50 would really, from my perspective, is the first target, kind of your T1 target. And then the next target, I think, is probably this gap fill at 124.75. All right, so there's two targets to watch. I like both of those. You probably are going to get a bounce here at this first target, and then you break. And you know what? We should probably mark this out too. This is actually decent support right here. Sorry, I'll make this the second target, 156.50, and the third and final target in my mind would be about 125, 124.50, somewhere right in there. All right, so more downside in UPS is probable, and I like it. I did short this one this morning. All right, can't stop, won't stop, GameStop. All right, this one is, I think we're done with the rally, so I'm starting to take a short in this one again. And it's a higher risk trade because it's a wild card. You know, it'll randomly just spike higher. It doesn't trade on any fundamentals. There's no fundamentals on this thing. It's all just speculative gambling, basically. So, but the thing is, we look to short some of this speculation. We've had a really strong rally from the lows down here, and this is where I was short GameStop, but again, I exited all my shorts back there in midway through March, and we dodged the bullet on this huge rally. When I went on vacation, this is basically what happened. Now, we rallied above the 200-day simple moving average, held for a couple days, but today you can see we're breaking back below. Also, a little bit of support right here at 160.50, and we're breaking below that as well. So it looks like this rally, this counter trend rally is done, and we're now going to head lower. I'm looking for this thing, again, to become a lot lower. Minimum target on this one for me is about 39. We should get a reaction down here. So that's where I'm looking for this to fall to. And that is a drop of about 75% in this one. So a good size drop on the way. Looking at the hourly chart as well. Look, here's the rally as it was rallying. And you can see that we basically started to build negative divergence. There it is in the PPO. And it's there in the RSI. You have an equal high. It's kind of hard to mark, but you have an equal high in momentum and you have a higher high in price. So that's divergence. So negative divergence in both momentum indicators on the hourly tells me that this rally is about to, it's about to fail. And you could probably mark out something like this. Maybe we have this little uptrend line, so we're going to come down to there. And we've got some support, minor support right there at about 131.70. All right, so we'll probably get down there, hit that, get a little bounce. But ultimately, on the daily chart, I'm looking for a lot lower prices. I think this rally's run its course. Again, you're going to want to watch the Qs and see if the larger, broader markets are selling. But when those broader markets start selling off, these highly speculative stocks, they just tank. All right. And again, because it's higher risk, you want to taper down your position size, in my opinion. All right. This is not something if I was going to go, heavy on triple Qs or shorting Apple or whatever, I'm going to do a lot smaller position size on this thing. You don't need nearly as much of a size position to be very profitable, and you want to mitigate your risk. If you get, you don't want to be too heavy in something like this, and then one day it goes against you and wipes you out. So that's position sizing is key. I teach that in my course as well. Gold sideways again, just no change. We've been here for about 3 weeks, so in between the ranges, I don't have anything to say. GDX, selling down to what looks like support right in here. So again, we could sell down and back test this trend line. I don't know if we will. If we do, that's a golden buying opportunity down here. And that trend line is your big isometrical triangle. On GDX, it's basically this trend line right here. So if we sell down to the 200, anything down near the 200, I'd probably be buying. And the 200 is down here at like 33. So I don't know if we're going to get that, though. Right now, it's in an uptrend. We have a longer-term breakout after consolidating for over 2 years. So I wouldn't hold my breath, but it is an opportunity if you get down there to add or take a position if you don't have one, at least in my opinion. Nvidia, you can see selling down today about 5%. And I know yesterday, because the market was up, I got a lot of comments from people saying the market's bullish, everything looks great. guys, we don't want to use every single day as where our emotions are at. We don't want to chase price, all right? If price is up one day, but the technicals haven't changed and the technicals tell us larger picture that we're going lower, then, you just have an up day, all right? And that's what NVIDIA had. You had an up day yesterday and today selling down, actually lower, just continuing downtrend. So the thing is, a lot of people yesterday probably felt like, oh, it's bullish, but today they're looking at like, oh, actually it's bearish. You can't change your position from day to day based on where the price is going, right? You need to read the technicals, and that's what I'm teaching on this channel, is how to read these things for swing trades and where to catch the real move and not the day to day. All right, this is not day trading, this is swing trading. Oil right here at support, all right? So I think oil is going higher. I'm not bearish oil right now. I just don't see anything that tells me that this is going to be a short. So I would say, if you're long oil, I'd probably just stay long, and we're just watching it. But it's bullish as of right now. So oil's bullish, looking for more or higher prices there. You can see something like DVN. This one's been building big negative divergence. This is an oil refiner or whatever production company, but it's got a bearish rising wedge. It's got negative divergence, so it has a bearish setup, but we're still holding that support. So I'm looking, even though oil might be bullish, maybe these refiners and stuff are going to have a correction. I think they're probably due, but again, we need that sell signal. We need a nice solid break below this support line. I just don't see it. So as of right now, just hanging tough and watching this one. No sell signal, just a mere setup, a bearish setup, but not a trade, all right? So that's key. You don't want to front run these things. You want to wait for the signal. Okay, Alcoa, AA, possible sell signal today. I want to see a little more downside, but the thing is, I want to see it basically close. We're kind of where we're at or lower. We're at 85.77. So on Alcoa, this has been in a really strong rally since March of 2020. Basically, since the COVID lows, this thing has been just a nice clean uptrend. Now we broke trend right here, and we had a lot of backtest, and recently up here it's just gotten real sloppy. All right, it's just really sloppy. So again, higher risk, I think, at this point, just given the fact that this trend line's been really violated and it's just gotten kind of messy. But the thing that I do like about this is negative divergence. So you'll see right there on the RSI and on the PPO, that didn't start building till about right here. There's your divergence. So this was a divergent high right in here, and today we're selling down and breaking the potential trend line. Now again, it's really, the only thing that makes this tricky is the fact that this trend line has not been as clean lately. So that's the one thing I don't like. I'd like to see some more selling. Maybe a bigger red candle might give us that sell signal. If you have a big red candle like that, that's probably going to be your sell signal, but that's a setup. It's not my favorite just because of this chop right here, but it is a potential sell signal. And, I'm looking at these commodities. I don't necessarily see a trade right now like that I want to go long on, but I just want to point out the fact that commodities are continuing to rally, right? Joe Coffee just hit support, the 200, it's rallying. So we're continuing to see, here's wheat. You had a pullback, but it's not, looks like it could continue to rally. Soybeans, they continue to rally up near the highs. And so we're going to continue to see inflationary pressures. I think that's really the fact. So the inflation trade, materials, commodities, gold, that is, I think, the bigger picture trade really for the next decade or so. Fundamentally, it makes sense. We're going to continue to watch the technicals, but and as the inflation trade continues to rage on, you're going to have the Fed. They're going to have to continue to try to fight it, all right? I don't think they can fight it, not in a way that it really needs to be fought, but they're going to talk hawkish. They're going to act like they're going to raise rates to the moon. I highly doubt they're going to, but what might happen, and I just want to talk on this for a second, is the market, the tech sector might go into a bear market even without the Fed raising rates. So the Fed is going to continue to raise rates, somewhat, but they might not raise it to the point where they can fight inflation. But the market might just sell off and go into a bear market without the Fed actually having to really raise rates too high. So if that happens, you know, we're gonna be on point. We're gonna watch for it. And that's all I got, guys. So thank you. Leave me a thumbs up on your way out. Check out the course if you haven't done so already. There's a lot of value in that course, especially for the price. And I will catch you guys on the next video.